Dear students, we'll go for one more problem on computation of taxable income and tax liability of companies applying minimum alternate tax. This is video number 8, problem number 7. Let us go through the problem. This is the trading and profit and loss account of Sharon Enterprises Limited, Mangalore. So trading and profit and loss account is given here, and followed by that some additional information is given. The depreciated value of plant and machinery owned by the company as on April is 50 lakh and building rupees 10 lakh. And in the case of depreciation block, building block, depreciation rate is 10%. And regarding plant and machinery, it's not given, but it's implied that it is 15%. During the year, machinery worth rupees 5,000 was purchased and installed in the factory in the month of December. So this machinery is purchased in the month of December. That means to say that is used for a period less than 180 days. As a result, it is subject to normal depreciation as well as additional depreciation. So it is 50% of normal depreciation, that is normal rate of depreciation is 15%, 50% of that is 7.5%, and additional depreciation rate is 20%, and here it is half of that, that is 10%. Company sold a machinery for 3 lakh in the month of January. Plant and machinery are depreciated at 15%. It is given. Okay. It is like this. The way the depreciation calculated is like this. Yes. Written down value of plant and machinery at the beginning of the year on 1st April. For example, plant and machinery 50 lakh. Add purchases or additions during the year 5 lakh. Minus transfers during the year 3 lakh, then whatever you get, written down value at the end of the year. Here 50 plus 5, 55 minus 3, 52 lakh. On that you have to calculate the depreciation. And there on 5 lakh you have to calculate depreciation separately, normal depreciation as well as additional depreciation. Normal depreciation is 5 lakh into 15% into half. You will get normal depreciation. Additional depreciation 5 lakh into 20% into half. That way you will get additional depreciation on 5 lakh. On the balance, what is the balance? 52 lakh minus 5 lakh, 47 lakh. On that you have to calculate 15% depreciation for the full year. And regarding building, 10% depreciation is to be calculated. Anyway, calculation of this is given separately in the form of working note. I will once again explain that. GST of 18-19, that is last year, paid during the year 65,000, not debited to the profit and loss account. So this is deductible while computing business income on payment basis. Therefore, from the net profit, which is taken as starting point, you have to deduct 65,000 rupees in order to calculate business income. And then unabsorbed business loss for income tax purpose 6 lakh and 4 lakh 50,000 for accounting purpose. Unabsorbed depreciation for accounting purpose is 3 lakh and 10 lakh for income tax purpose. Now let me take the values for accounting purpose. Unabsorbed business loss for accounting purpose 4 lakh 50,000. Unabsorbed depreciation for accounting purpose 3 lakh. So while computing book profit, from net profit you have to deduct the brought forward business loss of 4 lakh 50,000 or unabsorbed depreciation for accounting purpose 3 lakh, whichever is less. So here you can make out 4 lakh 50,000 minus or 3 lakh. Out of that 3 lakh is lesser one. So that is deducted from net profit in order to calculate book profit. Regarding values for income tax purpose, you have to calculate first business income and find out whether there is balance. If there is balance, you can set off 6 lakh, and further balance is there, then you can set off 10 lakh. Let us see later on whether the position is good or bad to set off. Next, of the customs duty 30,000, you find here on the debit side customs duty 30,000 due. Of that, 25,000 is paid on 31st August. That means it is before filing the income tax returns. Actually, income tax returns are to be filed before 30th of September. That is the last date for filing the income tax returns of companies. But here they are submitted before that, 15th September. And the customs duty is paid even before that on 30th August. That is very much allowed. So what is unpaid? Out of 30,000, 25,000 is paid. 5,000 is not paid. That is disallowed. Purchases include one item for which 40,000 was paid in cash. So you will find here purchases. Okay, first item 4,25,000. Of that, one item is purchased of value of 40,000 for which you are paid in cash. So if payment is more than 10,000 in cash, the entire amount is disallowed. So 40,000 is to be added back to net profit while calculating good profit. Business income. Other expenses include mediclaim insurance premium on the health of the employees, rupees 12,000. Out of this, 5,000 was paid in cash. See, in the case of companies, Section 80D is not applicable, whereas in the case of individuals and HUF it is applicable. Here it is not applicable, so no 80D. And welfare expenses are allowed in the case of companies. So mediclaim insurance premium on the health of the employees is allowed. But here 5,000 is paid in cash. So it is disallowed to the extent it is paid in cash. Otherwise it is allowed. So 12,000 out of 12,000, 5,000 is disallowed. 12,000 will be, remaining 7,000 will be allowed. That will be part of other expenses. So you have to add back 5,000 only because that is paid in cash. Mediclaim insurance premium should be paid only in form other than cash or bearer check. It can be paid in the form of crosser check or crossed DD or in other online methods. Okay, so that's about the adjustments. Now come to the debit side of trading and profit and loss account. Of the purchases, I already told you 40,000 should be added back. While computing, I'm talking about business income now. So this is allowed, but 40,000 is disallowed. Entertainment expenses are allowed. Traveling expenses are allowed. Depreciation is not allowed. So 5,50,000 should be added. And depreciation as per section 32, which you're going to compute. So that is deductible. That's to be deducted. Income tax, it is not allowed. Wealth tax is not allowed. Customs duty due 30,000 minus 25,000. 5,000 is disallowed. Provision for unascertained liability is disallowed. Proposed dividend is disallowed. Tax consultation fee is allowed. Provision for loss from subsidiary companies is disallowed. Salary is allowed. Donation to National Defense Fund, this is disallowed. And later on, it is deductible from gross total income, provided there is balance of gross total income, because this will come under 80G. Then other expenses, that includes mediclaim premium paid. Of that, 5,000 is paid in cash, that is disallowed. Okay, if you take the credit side, sales are allowed. Amount withdrawn from general is not allowed. Long-term capital gain, it is not allowed because that's not relating to business income. Profit from sale of goods exempt. Any exempt profit is not allowed. So that is deducted while computing business income. And all other adjustment I told you. Then you have to go for calculation of total income. So there you do not have income from house property. Then you have got business income. You compute that separately. Then long-term capital gain you have got 1,20,000. And then profit on sale of goods, that is not to be considered, it is exempt. Okay. Now let me explain you the items of book profit. Purchases is allowed, entertainment expense allowed, traveling expenses allowed, depreciation not allowed. And again, 5,50,000 should be deducted later on while computing book profit from the net profit. Income tax is not allowed, wealth tax is allowed, customs duty is allowed, provision for unascertained liability not allowed, proposed dividend not allowed, tax consultation fee allowed, provision for loss from subsidiary companies allowed, salaries, not allowed, salaries allowed, donation to national defense fund allowed, other expenses are allowed. On the credit side, amount withdrawn from general reserve should be deducted. Long-term capital gain is not to be deducted. Profit on sale of goods exempt under section 10B should be part of book profit from assessment year 2008-9. Therefore, that is not to be deducted, whereas all other exempted income should be deducted, and even expenses connected to that should be added. But here, this is not to be deducted, and expenses, if there are any, they are not to be added back. Okay, let us go through the solution now. I have explained everything here. Yes, net profit as per profit and loss account 2 lakh. Depreciation 5,50,000 should be added back. Income tax is to be added back. Wealth tax, customs duty unpaid before filing income tax returns. Provision for unascertained liability should be added back. Proposed dividend, provision for loss of subsidiary company, donation to national defense fund. So, and purchase in cash, entire 40,000 is to be added back. Mediclaim insurance paid in cash 5,000. So 12,30,000 is the total of additions to be made to net profit. So you'll get 14,30,000. Admissible expenses debited, expenses are allowed to be debited to profit and loss account, but not done. So we call them admissible expenses. So GST paid given in the adjustment 65,000, that is deductible. And depreciation as per section 32, I told you separate note is provided. So 8,92,500. So together 9,57,000. 5,000. 500 it should be, sorry, it should be 500. So 9,57,500. So the net answer is 4,72,500. Then from the credit side, general reserve should be deducted, long-term capital gain should be deducted, and profit from sale of exempted goods, the section 10B, that should be deducted. 6,70,000 should be deducted. This is to be this is to be deducted, and again here it should be deducted. So you will get the minus value, that is total income is nothing but loss from business. So 1,97,500. If that is the case, you have to find out the possibility of set off. There are two types of set off. One is intra-head and the other one is inter-head. Here you can go for inter-head set off. For example, in this problem, you have got 1,20,000 capital gains. You can set off this 1,97,500 against a long-term capital gains of 1,20,000 to the extent possible. So here, after setting off, still there is a balance of 77,500, and there is a loss. And you cannot deduct ATG here. That is donation to Prime Minister's National Relief Fund, I believe. Yes, donation to, yes, donations are not there here. Yes, not there. No problem. Okay, no deductions, and therefore nothing is deductible under section 80. Total income is minus 77,500. If this is the case, brought forward business loss and unabsorbed depreciation of earlier years cannot be set off against any income this year. So brought forward business loss should be set off only against business income of current year, whereas brought forward depreciation could be set off against any income, but you do not have any balance. So both have to be further carried forward to subsequent years. Alright, now come to the computation of book profit. Net profit as per profit and loss account 2 lakh. So income tax should be added back, not the wealth tax. Provision for unascertained liability, proposed dividend, provision for loss from subsidiary company, depreciation. So all these are to be added. So 11 lakh 15,000. So total will be 13 lakh 15,000. Amount will be withdrawn. Items will be deducted. Amount withdrawn from general reserve. Brought forward business loss or unabsorbed depreciation, that is 4 lakh 50,000 or 3 lakh for accounting purpose, whichever is less. So out of these 3 lakh is less, so it should be taken as deduction item of deduction. Depreciation as per profit and loss account, same amount should be added unless there is depreciation or revaluation of assets. So total deduction is 11 lakh 50,000. So book profit is 1 lakh 65,000. Now let us go for the last part, tax liability. Here first you have to calculate tax on total income. Whereas the total income is negative, in other words loss from business, loss from the business, that is no income at all. Total income is negative, nil. Therefore, there is no tax. Tax on total income is nil, I mean to say. On the book profit, let us see 15% of tax on book profit. So 1,65,000 is the book profit. On that, 15% comes to 24,750. Surcharge is not there because total income is not exceeding 1 crore. And then amount remaining the same. Health and education cess at the rate of 4%. That comes to 990, together 25,740. Now what is tax liability? The formula is tax on total income or tax on book profit, whichever is higher. In other words, whenever tax on book profit is more than tax on total income, then book profit is taken as the total income and then the tax will be calculated thereon and MAT is applicable. So here tax on total income is nil, tax on book profit is 25,740, therefore whichever is more or higher, so 25,740. So this is the tax liability of the company. So when tax on book profit is more than total income, then there is a concept called MAT credit. So MAT credit is difference between the two, that is 25,470. In subsequent years, if the tax on total income is more than MAT, then this credit could be used to the extent of difference between the two of that particular year. Okay, let us see how the depreciation is calculated. I already explained. Say for example, plant and machinery 50,000 at the beginning, additions during the year 5,000, so 55 lakh rather. Then transfer during the year 3 lakh. As a result, 52 lakh balance. Now you have to calculate the depreciation on that. First, we'll calculate the depreciation on the additional machinery purchased during the year. Additional machinery purchased during the year is 5 lakh. On that, at the rate of 15% and 50% of that, because it is used for a period lesser than 180 days. So 50% of normal depreciation of 15%. That means 7.5% ultimately of 5 lakh, that comes to 37,500. Additional depreciation only in the case of plant and machinery which is used for further production of goods and services. So 5 lakh into 20% additional depreciation. Of that 50% because it is used for a period less than 180 days. So ultimately 50,000. So total depreciation on machinery, plant and machinery purchased in the year is 87,500. Now you have to calculate the depreciation on the balance of written down value. So out of 52 lakh, 5 lakh is to be excluded. So remaining amount is 47 lakh. On that, for the full year, 15%, so that comes to 7 lakh 5,000. So 7 lakh 5,000 plus 87,500 together 7 lakh 92,500. 7 lakh 92,500 is brought here. Then on building, 10 lakh is the written down value at the beginning. No additions, no transfer, the amount remaining the same. And therefore, sorry, here it should be 10 lakh, not 52 lakh. A mistake has crept in. So it should be 10 lakh only. On 10 lakh at the rate of 10%, that comes to 1 lakh. So 7,92,500 plus 1 lakh, total depreciation is 8,92,500. So once again I repeat, this is 10 lakh, not 52 lakh. So this is the value to be brought here. By oversight it is written as 52 lakh. Alright, total depreciation is 8,92,500. So this is to be deducted from net profit while computing business income. That is what you have done. Just let us see for your information. See, depreciation here, it is 8,92,000. Sorry, together 9,57,500. But total depreciation is 8,92,500. 8,52,900. Yeah, this one. So these are explained already. Now depreciation on building I already told. When current loss is set off against long-term capital gain, still 77,500 is there to be set off, which cannot be done. Therefore, it is carried forward to next year or subsequent years. And carried forward business loss of earlier years 6 lakh and unabsorbed depreciation are further carried forward for set off in the next year or subsequent years. So it cannot be set off this year, so it is carried forward. It can be set off for 8 years, 8 assessment years. GST paid before filing the income tax returns is allowed and the balance is disallowed. Medical insurance premium on the health of the employees is disallowed to the extent it is paid in cash, whereas balance of premium is very much allowed. Since GST is negative, deduction under section 80G is not allowed. Since the normal tax is nil, book profit is taken as total income. Company can claim MAT credit under section 115 JAA to the extent of rupees 25,470, already you have calculated. From the assessment year 2008-9, profit under section 10B is not deducted while computing book profit. Most of the items are repeated in earlier problems, and almost all items are being covered. So thank you very much for listening patiently.